Hey everyone, in this video we're going over Norwegian Cruise Line. This is the Bittan Brief. I'm your host, Alexander Bittan. Now let's get into why I think it's time to load the boat on Norwegian Cruise Line stock. So first up, let's look at the stock here. It was trading at about $15 at the time of this recording, about $15.54. This is down 40% from year to day, from the beginning of the year, and it peaked at $29, just under $30 a share, about double the share price on January 30th. From that point, it has steadily come down with the market, and recently had some more severe pain on these tariff news and possible taxes for cruise lines, etc. But this stock is a $6.89 billion market cap right now, trading less than half what it was. It was over $12 billion before. Now, let's get a little glance from their most recent earnings report on what you're buying when you buy NCLH. Well, with NCLH, there are three cruise lines. There's Norwegian Cruise Line, the main brand. There's Oceania Cruise Line, which is their more luxurious brand. And then there's Region of the Seven Seas, which is ultra luxury. And it breaks down that 85% of annual bed days for their cruise ships are basically with the main brand Norwegian Cruise Line, which has 19 ships, 56,000 berths. Oceania Cruises is 7 ships, 6,300 berths, and Region is 6 ships with 4,100 berths. Now, each one of these brands does have additional ships on order, which we will get into later, but just as a baseline, so you know, there are 8 ships on order for Norwegian, 3 ships for Oceania, and 2 ships for Region. They're expecting $10 billion of revenue in 2025. They're expecting to carry 3 million guests in 2025, and they have a total of 32 ships in the fleet with 13 more on order, so that's going to expand capacity drastically. Now let's get into some of the things that I'm pretty excited about, like Starlink on board. They have brought Starlink to their ships, so much faster internet. Nowadays, obviously, internet's extremely important. Having quick internet in the middle of the ocean is pretty much a must-have nowadays, and that deal with Starlink has made it more accessible to more people to be willing to go on cruise ships, knowing they'll have a higher speed internet and be able to get work done. If, a lot of people nowadays work from wherever they are, work from home, And there's actually even a lot of people that live on cruise ships, believe it or not. They also have a partnership now with NHL for Norwegian Cruise Line, and Region, their most luxurious brand, has a partnership with the Aramco Formula One team. So that's pretty cool as well. And then a whole new brand campaign they're running. If we look at the numbers, that's probably one of the most important things, obviously, we can look at is where do they sit currently, and then kind of historically, how are they doing? So currently, the company has a market cap of $6.8 billion. Their enterprise is $19.7 billion because they do have a lot of debt. Now, if we're looking at their price to earnings, this is 8.2, which is down from 22.5 at the end of the year on December 31st. So it's an extremely low price to earnings, 8.2. But even lower than that is if we look at their forward price to earnings, it's now sitting at 7.45. This is super, super low for forward earnings of a company with still a lot of growth ahead. Their PEG ratio, 5-year expected, is 0.38, so extremely low. Now let's get an idea, all right, is this a stagnant company? Is this a company growing? Well, if you look at their revenue from 2015 through 2024, we can see that the revenue has consistently grown. The only dip was obviously the 2020 situation where all cruise lines were halted and not running. Besides for that, it quickly recovered up, and in 2023, they had much more revenue than in 2019. 2019 was $6.4 billion, and in 2024, they ended with $9.479 billion of revenue. So this business is already massively greater than it was pre-2020. And with the continued fleet expansion, I think this revenue number is just going to continue to rise, and this is going to be a very well-growing business. Now, and the industry itself, cruise line industry, is massively growing. Even Disney's talking about doubling their fleet because of how well it's going. Now, if we look at their 2024 EPS, so this is numbers actually done, they did $1.89. If you think about it, $1.89, even if it was a 10 PE, which I really think they deserve more, especially with the growth we're going to see here in their earnings, it would be a $19 stock, and it's $15. So, and I think it deserves far more than a 10 PE because of their growth in their EPS. So we can look here, 5 years, their EPS is going to go from $1.89 to $4.26. This is analysts expecting this. It's the estimates for 2029. We have all these EPS estimates between 2025 through 2029. That's a massive jump over 5 years. So let's just do the math on that. If in 2029 they do $4.26 of EPS based on what analysts are expecting them to do, and you put a 13 PE, which I think is the fair PE for cruise line industry, I think you could justify more and you could justify it being slightly less, but I think 13 PE is the right number. It would be a $55.38 share in 2029. So you're going from $15 to $55.38. That's a massive increase, right? We're talking about clearly more than a 3x, and that's not that long in 5 years' time. So what about the more immediate future? Because some people are going to say, oh, well, that's 2029. The market's crashed. What are we thinking in the more immediate future? Well, the company actually has given guidance themselves for the more immediate future. They've said that 2026, they expect to do $2.45 in EPS, which is over a 30% CAGR from 2024. They expect net leverage to be mid-4 times. They expect adjusted return on invested capital to be 12%, which would be record levels for them. And the adjusted operational EBITDA margin of 39%, which is approaching historical margins. Now, the company has also consistently beaten and raised guidance quarter by quarter since 2020. They've just been super conservative and constantly beat these numbers. So I have no doubt they're probably going to beat this 2026 number. I think we're going to see this a lot sooner. So let's take that company guidance, though, of $2.45 of EPS in 2026 and put that 13 PE on that. And that's going to get you a share price of $31.85 for next year, 2026 price target. Now, it's a $15 share price today. So we're talking about a 2x, a doubling in price for next year's EPS. And this doesn't even, give the upside to the EPS continuing to grow massively through the next 5 years. But if you just do a simple 13 multiple on next year's earnings, you're going to have a $31.85 share price. And I think that $2.45 is low. I would not be surprised if we saw closer to $2.80, approaching $3 of earnings next year. Now let's talk a little bit about the negatives, because yes, the company has a ton of debt. Yes, the company had to dilute shareholders heavily, especially in 2020. That all said, at the end of the day, EPS takes into account the total amount of shares, so the dilution's already accounted for when we're going by their earnings per share. And as of for the debt, they're paying it down. The interest on the debt as well is part of the business, so they're paying the interest as an expense, and we can look at their business with this interest. If the interest wasn't there and they didn't have this debt, then this company would be trading at a much higher valuation. I mean, it wouldn't be trading at the low P's it's trading, and it wouldn't. Its earnings per share would be much higher without certain expenses that it has to occur. So let's just talk about the de-risking and whatnot. They've shown this chart here where you can see they went from, just in Q4 2023, from 7.3 times leverage down to 5.3 times, a 2 times reduction of net leverage in 2024. That's just over 1 year. They're expecting it by the end of 2025 to be basically less than 5 times. And they're expecting mid 4 times for next year in 2026. So they're going to continue to create a more strengthened balance sheet, which is really good for investors. We don't want them to have tons and tons of debt. We want their balance sheet to be stronger. And I think they're going to execute on this vision. It's something they did in the past when they had a lot of debt. They showed that they were able to reduce it and get their net leverage down, and they're doing the same here. Now, this clear path to charting the course targets, which are the targets that basically include the $2.45 of EPS in 2026, it shows the growth of the adjusted operating margin, adjusted EBITDA operating margin, from 30.7% in 2023, how it went up to 35.5%, and how they plan to get it in 2026 to 39%. It talks about the net leverage, like we said, going down, and the adjusted return on invested capital going from 10.9% in 2024 to 12% in 2026. So good targets. I expect them to actually beat in pretty much all of these targets just because they have been so conservative and have been beating pretty regularly. Now, let's talk a little bit about the fleet expansion. So, bigger ships are coming. You can see in 2025, this year, we already have the Norwegian Aqua, which is coming this quarter, Q1. It's actually this month coming. We have in Q3 for Oceania, the Allura, which is going to be a really nice ship. That's going to hold about 1,200 people, whereas the Aqua is 3,550. The Luna, Norwegian Luna, is coming in 2026. So next year we have the Luna, and we have a ship for Region of the Seven Seas, which is their ultra luxury brand called Seven Seas Prestige. These are incredible ships. I mean, if you look at how well they're designed, incredible ships that do incredible itineraries. In 2027, you have a next generation methanol ready cruise line for Norwegian Cruise Line. And then we start to see these new classes. And what's important here is the Oceania 2029 and 2027 actually is when the first new class for Oceania comes. We're talking about 1,450 berths. Now that is up from, if you look at the Allura, 1,200. This is a bigger ship. And this is across the board. If we look at Norwegian Cruise Line, their new class is 20, 30, 32, 34, 36. This new class of ship from them. We have not seen it. We don't know what it's going to be called. We don't know what it's going to look like. 5,150 berths over the 3,550 berths that we're seeing on Luna and Aqua. So these are much, much larger ships. They're going to be building humongous ships. Think Oasis class ships from Royal Caribbean, very, very large ships. So I think this is great. These are going to have incredible economics for the company. We're going to see all these new classes. But before that, we will have a next generation Prima class coming from Norwegian. So again, these full year results and how they differed from their projections they gave prior, the guidance. I was saying that this company loves to beat guidance. They like to be conservative and then come out ahead. So let's just see how they've done that before. Well, in Q3 2024, when they were going over full year 2024 guidance, they were predicting that the full year would be $1.65 of EPS, and this was only 1 quarter ahead. They had pretty clear insight. They sell tickets in advance. They told everyone $1.65. Well, the actuals came out at $1.82 for the year. And they had already done Q1, Q2, and this was during the Q3 call, so Q3 was finished as well. It was only a single quarter out that they were projecting what the whole year would look like, and they massively beat it. Well, what about Q4 results? Well, Q4's guidance was for 9 cents of EPS. The actual was 26 cents. I mean, that's the difference. That, guiding for 9 cents and doing 26 cents, what a beat. So what do you think of Norwegian Cruise Line stock at $15 a share? It was $29 a share at the end of January. 2026 EPS, which I think they'll beat, but assuming they just hit the guidance on dot, will do about a $32 share price at a 13 PE for next year. A 2029 EPS that analysts expect will justify a $55 share price on a 13 PE 5 years from now. And if the stock is in 5 years, $55, we're talking about a 266% return from today's price. That's a 29.7% CAGR between now and 2029, making 30% basically each year compounding. So, if those numbers are accurate, are you a buyer or not? Or do you just not believe those numbers or have other reasons and concerns? I mean, there's a lot of concerns in the market, so I don't blame you. Comment below what you think of Norwegian Cruise Line. Thank you for watching. Like and subscribe if you enjoyed this video. I really appreciate it. This is a new channel, so like always, we'll keep these videos brief. Under 20 minutes is the goal. Get to the numbers, not just give a quick opinion, but provide some value, some insight, some price targets, and talk stocks. So until next time, if you enjoyed this, don't forget, like that button, subscribe to the channel. See ya.